part 3 of our Wells Fargo analysis, insider trading. Now that's of course legal insider trading. If you want to see part 1, our financial analysis, that's really important to see. And of course part 2 is about all the legal issues Wells Fargo's having. Also pretty important. Now this is not financial advice, this is for entertainment purposes only. Okay, so here we have all the transactions that Charles Noski files with the SEC, and we'll talk about who he is in a second. But importantly, you can see here the second line in, highlighted in blue, 20,000 stock was purchased by him. So if we look at the Form 4, get a little bit more of the particulars, 20,000 stock at $30, roughly $30 is roughly going to be $600,000 worth of stock was purchased. Quite a large amount we're going to see for him. Now it was indirectly purchased, meaning he didn't personally buy it. It was through a revocable trust, which means this third party, he's part of it. It's a trust, but he can break it apart himself. And so, in a way he did it directly. But even if he didn't, even if this is another trust and he couldn't revoke it, nevertheless, it was, clearly he has some influence, presumably. And so we could look at this as an important indicator that he bought a massive portion of stock. And who is he? Well, this is the important part. He is chairman of Wells Fargo board, and he was elected effective March 2020. So obviously someone important. And of course, he was vice chairman and former chief financial officer of Bank of America. So he knows his way around banks, of course. Also very important. Now, that was, 2012. He was part of Bank of America, and then he retired. So on one hand, he hasn't been necessarily involved in banks for about 8 years. But nevertheless, obviously someone who knows their way around. And of course, he was a director since 2019. And you don't want to miss that fact. So he didn't just all of a sudden come on and buy some stock. And so we can look at that 20,000 as him looking at this stock price as very favorable, very cheap, and he thinks it's going to go up. That's one perspective. I think that's actually a pretty fair perspective. The other perspective, of course, is we can see in this statement here, he was elected effective March 2020, and he purchased, and we'll look at it again in a few seconds, but he purchased that 20,000 shares in the month of March. And so it's very possible that to be, one of the requirements to be chairman of the board of directors, perhaps you have to own a certain amount of stock. And so perhaps he simply had to buy it because he wanted this role. And it doesn't have anything to do with his interest in the company or the price going up or down. So there really are two ways to look at this. And it's I suppose, not clear-cut because we don't know all the rules and regulations going on. But nevertheless, there was a big drop in the price. He purchased some, and a very sizable amount we're about to see. So to me, I would lean more towards the former option. But once again, we're going to have to look a little bit more to really get a clearer picture of all the insider trading, I think. Now, if we look at the compensation table, we can see Charles H. Noski here, and he gets 165,000 of stock, which is pretty nice. And if we look at his SEC filings a little bit more clearly, so we can see that he first was awarded about 3,707, if you add those together. And of course, in the 10K, I was able to find that he was actually granted those for, being elected onto the board. So they gave that to him as a gift. I suppose that's just one of the things they do. So, this is obviously the start of his awards with Wells Fargo, and this is obviously just simply part of being part of the board. This is the amount of stock, I suppose, you get, or how they at least entice them onto the board, I suppose. Now, the next award, 172 shares, that's, not a small amount, of course, it's a few grand, but nevertheless, you can see that this is probably, once again, part of regular board functioning. And then again, 3 months later, you see, a little bit more stock, 626, but nevertheless. And then 3 months later, once again, you're seeing this kind of same amount of stock. It's kind of a regular interval. And so I just assume this is part of being part of the board. Now, all of a sudden, in March 13th, he purchases 20,000. So once again, is that part of him being chairman of the board, or is that because he saw a great price, which it was a great price? $30 was quite a tumble from, where it was a few months ago at 50. So it's a little bit unclear, but those are the two options we're seeing right now. And then, of course, he was awarded about 8,000 shares shortly after that. So, did he want to purchase it before? Did he think it was going to bounce right back up? It's obviously staying quite low. Nevertheless, he got these awards, and these are substantially higher than pretty much all the rewards he's been getting up until now. So what's going on? Well, this 6,235, just after some quick looking, I noticed quite a few people got it on April 28th, the exact same day, the exact same amount. So presumably something just being part of the board and an award, one of those very nice things. And if we look at that 2000 award, well, at $26.57, which is what it was, that's about 57 grand. And so you could assume that that's part of, that $165,000 package or, whatever that might be. And so, that seems very in line. So nevertheless, the key point here is the 20,000 stock purchase. I think that is the most interesting part of all of this. And the rest is probably just regular board awards and just being part of the, Wells Fargo board. And the 20,000, we're not entirely sure, but we think it's more likely that he purchased because he thought it was a good time. Okay, so now let's look at something also extremely interesting. And now we're looking at this new CEO that we mentioned in our first video. And we can see that he made a purchase, and a direct purchase, of 173,000 stock. So that is an extremely sizable amount of stock. Nevertheless, you can see back over here at the end of 2019, October, he got 570,000 stock awarded to him. So on one hand, that 173 doesn't seem quite as big as this award. So we're going to have to look into what's going on here. So I did find an article, I forget exactly where this was, maybe it's part of Forbes, I'm not sure. But nevertheless, he got $26 million of Wells Fargo stock when he joined to be CEO, simply by the fact that his previous job, he would have gotten that type of award, and so they were willing to give it to him to get him onto the CEO of Wells Fargo. So that's what's going on in terms of that massive 570,000 stock award that you can see over here on this Form 4. Now, if you look at this bottom line, and I think this is really important, and this is why it's so useful, and I was so happy to really go into the Form 4 and really look at all the details and really try and sleuth around. That's why it took me so long to really make this video, is to try and find all these little details. So you can see that he is going to get this award, and it's going to be split up over the next few years. And, it's going to be awarded to him October 2020, and then once again, October 2021, October 2022, 23, 24. And so this is all split up, presumably over 5 years. And, it's not going to be just one lump sum of 26 million. So he doesn't really have this 570,000 stock right now. And I think that's pretty important from my perspective. And so you can actually see that he did pretty much this purchase. Really, he acquired and disposed of some shares here. You can see that he got 100, and after he got those 100, he had 3,963 shares, and he disposed of 47. And that has to do pretty much with taxes. So if he's going to get a certain amount of shares, as far as I understand, just based off of looking at the Form 4s, he's going to pretty much dispose of some of those shares. The bank will take some of those shares to pay for the taxes of giving him those shares, and so he pretty much only gets half the shares that I suppose he acquired. Just a cursory glance, definitely not an expert at this. Leave a comment below if you know a little bit more, but that's what I understood. Now, nevertheless, the 570,000 shares divided by 5, so he's going to be able to get 114,000 shares pretty much each year in October. And so now that purchase of shares is substantially more than he would be awarded each year. But nevertheless, at around $20, if those shares were only $20, he'd be getting $2.3 million. That is an enormous amount. And of course, he was awarded these shares at quite a higher price. And in theory, the price was $50. And so, we're talking about about 3 times more than this. So $6 million over 5 years, $65 million over 5 years. Yeah, that's pretty close to that $25 million, right? So that's pretty much square on. And presumably, as far as I can understand, now once again, correct me in the comments, but presumably this amount of stock will not change based off of the price fluctuations, meaning each year he's going to get 114,000 shares regardless of the price. And so, of course, it's in his best interest to make sure the price goes up from this moment. Now, the beauty here is we can see the price that it was at 1021 on this Form 4 itself, actually, quite simply because we can see he disposed of some shares pretty much around the same time at $50. So he was getting this $26 million award pretty much at $50. It's obviously taken quite a steep decline, so this is even worth quite a substantially less. Instead of being $5 million, now it's around, it'll be a little bit over $2.3 million because I'm only using $20. But nevertheless, quite a steep dive. But very important to know how much he's going to get in October this year, and of course October next year. Now, if we look at his purchase, so now instead of around 100,000 stock, we're talking about 173,000 stock, and at around $30, that will bring him up to about, not bring him up to, but this will be a purchase of about $5 million worth of stock. So that is a sizable amount, and of course, in terms of what he actually has in Wells Fargo, this makes up 177,000 of his stock is what he just purchased at this time at this extremely cheap price. So that is quite amazing to me. And so from my perspective, this Charlie Scharf, from my perspective, the CEO pretty much saw the price took an extreme tumble. He's looking at the market, he's looking at the bank. Now, of course, he is somewhat new. He was only put CEO at the end of 2019. But nevertheless, obviously part of banks, he knows what's going on. I think he knows what's going on in a general sense for sure, in terms of the economy, in terms of banks in general. I'm sure he's been exposed to quite a bit about the financials of this particular bank, of course. And so for him to look at that price and say, I want to put in $5 million, and he's already going to get $26 million over the next, 5 years. So for him to do it now specifically, to me, it almost looks like he's signaling, I think, that, yeah, this is a great time to purchase the stock, and so he's going to purchase quite a large sum. Now, I think it's a large sum. Maybe $5 million for him is like nothing. I have no idea. He gets $26 million of awards from his previous job. But once again, I don't know if that was over 5 years. But nevertheless, that would still be quite a large sum of money. Now, there is one other option. The other option is, once again, being CEO, he has to own a certain amount of the stock. And he saw an opportune time to buy quite a large amount of stock at a low price. I don't think so, because even if he did have to own quite a large amount of stock, I mean, he's already being awarded an extremely large amount of stock. So it's hard for me to believe that. So once again, between our last Charles Noski and now Charlie Scharf, what I'm seeing is two major insiders, right? The chairman of the board and once again the CEO of the bank, both of them buying into the stock sizable portions of their investment portfolio. And although he will be getting, let's say, around $26 million, but that's only over the next 5 years. And that's the important point of why we looked at that Form 4. And so this is a sizable amount of stock, and more than he would be awarded this year and almost awarded next year. And it almost makes it seem like he really wanted to get in now, at the beginning when he saw a really great price. Now, does this mean it's going to be the lowest price? Does it mean he's not going to buy more? I have no idea. He might very well buy more. Or perhaps he just bought at the beginning before everything was going to tumble, and he didn't want to look too bad and taking advantage too much of the stock price, and he just decided to take it at the first chance he got, and he's not going to bother anymore. It's so hard to read these things. But nevertheless, to me, it seems like it's a good signal. Now here we have another Form 4, and just to show you how maybe not clear insider trading can be, we have about 11,100 stock being purchased here, whether it's through IRA or through a trust, and it was bought at that purchase price about $41. Now, obviously, that is a tumble from $50. That's 20% lower. But of course, when you're looking at the $30 price range that it is now, and below 30, I should say, that's this was not timed well. Nevertheless, it is his job here is Vice Chairman of Public Affairs. So from my perspective, he doesn't probably have the experience or insider knowledge of someone like the CEO or the Chairman of the Board, who was CFO for Bank of America. So perhaps they know better, the timing of the market. I have no idea. Or perhaps it's just part of their job specification. My only point here is really that insider trading is not the end-all be-all. But nevertheless, we do have two high-ranking people investing. And so to me, that signals something very important. Okay, so in terms of Wells Fargo, we went through three parts of this whole thing. What am I thinking of the whole bank? So first of all, I should mention that I have invested a little bit of my money. I expect the bank to continue going down, and we'll talk about why. And once again, this is for entertainment purposes only. Okay, so in terms of the revenue, just going over some of the just outside general points, you can see that it's been going up steadily before this whole crisis, and that to me is a really good sign. Net income jumping around quite a bit. Now we mentioned a lot about legal things and salaries, and we'll talk a little bit more about that. Not great, but it's pretty stable. I would like it to be improving a little bit more considering revenue is going up, but nevertheless stable. And if we're going to look at the PE ratio, we can see that it's actually pretty low compared to where it's been. And I think right now the PE ratio is even lower than this chart is showing, because I think right now it's around a little bit over an 8, which is, it looks like from this chart of the past almost 12, 15 years, that looks like almost the lowest PE ratio. Of course, when you look at the financial crisis, it's very unclear, and we have no idea what really the PE ratio over there is based off of this chart. So not great. But nevertheless, in terms of just generally over the past 20 years, it's usually been, I would say, maybe not substantially more than 8. We're not talking about double the price, but we are talking more than 8. And so perhaps this is a bottom, but I don't think it is yet. Now, in terms of the dividend yield, we can see quite a large amount of dividend yield, assuming dividends don't get cut. I think they will get cut like they were in 2008, even though the bank is saying they won't. Nevertheless, in 5 years, things will be back. Now, Charlie Scharf, we have a CEO. Of course, he's new. Now, he mentions a number of things that I want to bring to everyone's attention. $1.5 billion in expenses just for legal fees. And, based off of part 2, we're obviously going to see a lot more legal stuff going on, sadly. Also that he's very new to the company. And so this is, going to be a difficult time for him, being so new. Just getting his feet wet and then having this crisis is not great. And of course, him mentioning the regulatory issues, which are a major, major, major problem for this bank. Now, this is the 10K once again from the end of last year, and already we saw a $1 billion, drop from the previous year, and that's before the crisis. And interest income was down, which is not great because interest rates now are even going further down. And non-interest income was up a little bit, and so that's good. Now, in terms of non-interest expenses, I just wanted to point out that a major, major amount of this, we're talking about $23 billion of non-interest, which is almost half of the total. That's just from paying people in the bank. And of course, they mentioned in their when they were doing their quarterly results, that they were going to raise the minimum hourly pay levels from $15 to $20, and that'll be 20,000 employees. So that's going to significantly increase, that salary just a little bit more. Those things are not going to go down, as far as I can tell, unless they're laying off people, but they did not mention that. Now, in terms of pretty much the revenue, so once again, that $85 billion we mentioned, it's been going down steadily from the other years. And of course, in both sections, both community banking and wholesale banking, they're both going down substantially year after year, which is not great. And wealth and investment management is pretty stable around $17 billion. So that at least is good. Now, nevertheless, the net interest income is up $112 million in the first quarter, even though interest rates have been going down, and that's specifically because of a hedge. So that's pretty impressive. Of course, they did mention that they don't, hedge the entire interest rate. They can't, and if it moves too fast, it's hard to cover it. Nevertheless, so far they're doing pretty well, and that to me is pretty impressive. I don't think that they'll be able to keep that up, especially with so much speculation about whether interest rates will become negative or not, which is a little bit scary. Now, in terms of non-interest income, that's actually down $2.3 billion. And to me, that's a little bit scary because that's the type of thing that you want to continue going on in a crisis when interest rates are going down, you want non-interest income to at least go up and to make up for it. So that's not great from my perspective. The great thing to me, though, is in terms of non-interest expense, that's down $2.6 billion. So even though the non-interest income's down, so is the expense, and it makes up for it. Although, of course, quite a large amount of that is from legal fees. However, I'm not entirely sure they're out of the woods with those yet. See part 2 if you want to know a little bit more about those things. Now, they also mentioned that they have other expenses going down in the quarter, like outside professional services, technology, and equipment. So it looks like they're trying to be careful about expenses right now and not using all of their ability and all their funds and trying to tap down some of the spending, which I think to me is a good sign. How much did they actually accomplish? I don't know. But at least there was another $1.1 billion besides litigation. So, that's pretty good. Now, in terms of their loans, their loan portfolio, a massive amount of it, especially in the consumer, is in real estate. And you can see our part 1 to know a little bit more about that. And a small amount, from my perspective, only $40 billion of the $450 billion of consumer is credit card. So to me, that's a really positive thing. Now, in terms of unfunded credit commitments, in terms of commercial, most of it is to companies, so whether commercial or industrial, and that makes sense. And they mentioned that they had $50 billion pulled out of this. So not a large amount. There could be quite a bit more, which is a little bit scary. But nevertheless, they said it. People stopped. So we'll see what happens there. And I think J.P. Morgan also was very similar. People took an immediate, $50 billion, and they stopped. And of course, in terms of Wells Fargo, these commercial and industrial people who took out that $50 billion put it in deposit. So it's not. It doesn't seem to me like they massively need this money, and it's. All the wall, everything's coming down around them. No, it just could be for liquidity that they needed on hand, and they're just nervous. I have no idea. But nevertheless, the thing that scares me a little bit in terms of the consumer stuff is that they have $114 billion where people could rack up credit card debt. So that's substantially more than $40 billion, right? We're talking about another 3 times credit card. And once again, credit card is the scariest kind of debt, as far as I can tell, in terms of people defaulting. Why? Well, once again, people will very easily run that up if, they really need food, and they, in this situation, you can imagine someone just keep putting things on their credit card and not being able to pay and just defaulting on it. It's very easy to imagine that, and credit cards have a high default rate to begin with. We saw that when pretty much both banks, but even Wells Fargo alone, they put a lot of their reserves specifically to credit card default. And so, this is a little bit scary. Now, we'll have to do more of a proper comparison to JP Morgan eventually, I suppose. But, in terms of unfunded credit card, I think JP Morgan had quite a large amount compared to this, something around 600 billion. So, from my perspective, credit card, once again, it's hard to compare both banks. But, we're not talking about some massive amount of growth of credit card debt. But it is quite substantial, so it's something to be concerned about. Nevertheless, we talked about it in the first part that people weren't, defaulting on their credit cards yet, and how much. So it's a little bit hard to tell. It's very early, but something to consider. So if you think the real estate mortgage, it's going to collapse and people are just going to lose all of these mortgages in their houses, that's going to hit Wells Fargo's current mortgages and current, if people get a default, it's going to affect all their loans. If you think people are going to go through their credit cards, similar story with Wells Fargo. But at least it's only $114 billion on top of the $40 billion. It's not a small amount, but not a massive amount compared to, the $1 trillion worth of loans. So, it's worth keeping in perspective. Now, in terms of the average loans, you can see that their yield in the white, it's been going down, and it's been going down since the first quarter of 2019. And so that kind of makes sense why their net interest income has been going down steadily. But of course, sadly, with this whole thing, it's going to keep going down because interest rates are going lower and lower, and hopefully for the bank, not negative interest rates. And so that is, I guess, the point. What's going to happen with this bank? Well, as far as I can tell, my feeling is that they'll make it through. I think most of the banks will make it through. We're talking about, everyone's talking about how well prepared the banks have been compared to 2008. And I think it shows, personally. And I think that they're taking it obviously very seriously, and putting reserves already, and throwing caution to the wind in terms of not caring about their earnings per share, not caring about what the stock market sees as them, putting in the stock owner's pocket, quote unquote. Although they are keeping dividends, so it's a little unclear on that one. But they were willing to take a cut on earnings per share substantially to use all that money for the reserve. So, to me, that's a good sign. It means they're taking it seriously. And, that's what you would expect, I suppose. So you shouldn't be surprised there. Nevertheless, I think the banks will make it through. I don't think the government will allow banks to fail, of course. But I also just don't think that they're going to have a massive run on money, even if it's not a V-shaped recovery. Nevertheless, with negative interest rates, that will slow what the banks will be able to recover from. That's going to hurt them quite substantially for a little bit. But nevertheless, I think they will return, but they'll return more likely. It'll be slower than everything else. So you're going to see a lot of other stocks come back before the banks. So this is, once again, a much more long-term play as far as I can tell. Once again, just entertainment, not financial advice. So this has to be a long-term play from my perspective. I think it's a good price now. I think with all the uncertainty with the economy, the banks, they haven't rebounded like other stocks. Yeah, that makes sense because, there's so much fallout from the economic situation that people are really unsure with banks. Banks are cyclical anyway. They don't have rapid growth to fuel people's imagination about where the stock price will go. So, the banks are going to be a lot slower, and financial bad news is going to hit them a lot harder, I think, compared to other places and other, stocks. So it's definitely something to keep in mind. Once again, I think that there's a very likely chance that the stock will go down in price. How much more, though? I don't know. It is still quite low. Could it lose another 10%? I think it's very possible. But that being said, as I mentioned in this video, I've already purchased a little bit of Wells Fargo. Is it my total amount? No, it's actually a very small amount, probably less than 10%, although I haven't really worked out the numbers, but probably I would say less than 10% that I'll put into Wells Fargo. Why? Well, because once again, like I said, I think it's going to go down, but if it doesn't, well, at least I got a little bit into the bank, and, that money will come and will improve, and I won't have missed, the whole ride, quote unquote. No one wants to feel like they missed everything, but that is how strongly I feel that the price will continue to go down. Once again, I could be very, very wrong, but I hope you enjoy. Let me know what you think in the comments. Of course, let me know what you want me to analyze next. That's always useful. And what you liked about the video or not. Am I rambling too much? I don't know. And of course, if you disagree, that's also really useful. And thanks so much for everyone who's been supporting me, subscribing, voting up, and commenting. I really, really appreciate it. Whether it helps with the algorithm or not, I don't care. I just really appreciate it. So thank you so much. And of course, thank you for watching.